Every decision we have to make as a leader, you have to think about who's going to do it, not what the decision is, because decisions are relatively easy. So if you put all that together, I think you form your leadership style over time, but inherently you have to have a nature that you're willing to step in.
Hi, everyone. Welcome to Leadership Next, the podcast about the people
and trends
that are shaping the future of business. I'm Diane Brady.
And I'm Kristen Stoller.
And this week, we are speaking with one of the more enigmatic leaders I've ever met, Brian Moynihan of Bank of America.
Yes, iconic brand, iconic bank. And Diane, you got to spend some time with him in Davos earlier this year, right?
I've spent periods of time with him over the years. Yes, Davos was particularly high profile because, of course, he was on stage with other CEOs when President Trump called him out, basically.
Yeah, for political debanking. And you were in the room, right?
And in quintessential Brian Moynihan style, he just sat there and quietly, stoically took it, didn't say a word. And I think that's very much his style. He is not a headline grabber. He is somebody who talks when he has to in terms of, you know, certainly speaking about the economy, the bank. I mean, he's been in the role 15 years.
Yeah, of course people compare him to Jamie Dimon. That's his peer. But he's vastly, vastly different.
That's right.
And I think they've both been in their seats for a very long time, but it must be hard.
Well, he's lived through the banking crisis. I think that it's the second largest bank by assets. I do think part of what distinguishes Bank of America for me is it's always had an excellent internship program, and it's got what I see as a very much an academy company culture in terms of developing leaders. So I'd say he's very internally focused. Obviously, it's a job that by nature has to be external. He happens to also live in Boston for a bank that's based in Charlotte. That's interesting.
And he clearly cares about education, not just in the internship program, but he's the Chancellor of Brown University.
What a time to be Chancellor of the least Ivy of the Ivies, as they say.
But the most fun, as someone who loves Providence and was just there exploring and having a great time. But the funding freeze must be tough on him. So I'm curious what he feels about it.
And the partisanship and obviously navigating geopolitics right now.
Yeah.
You know, banks tend to be in the crosshairs. You know, when people get angry about money, they talk about fat cats and banks. And it's always a source of both stress and it's always something that's in the headlines. And I'm sure Brian will have a lot to say, but definitely somebody who is 15 years into the job, I think will have a lot to say about leadership. And honestly, Kristen, I'm just curious to see the world through his eyes.
I am too. And you and I met him at drinks last night. We were on the rooftop at the Bank of America building
Ask
in
me
Bryant
anything,
Park.
Diane. That was his instructions, and indeed we will.
We will, absolutely. Well, looking forward to our conversation with Brian after the break.
We're entering an era of innovation unlike any we've witnessed before. You all see it. The pace of technological change is staggering, and it's challenging for any leader to keep up. We spoke with Jason Gerzadis, the CEO of Deloitte US, which is the longtime sponsor of this podcast. Here's his advice for leaders on how to navigate this new world.
There's probably nothing more important for CEOs, no matter what organization they're leading, to really be thinking about technology's impact on their workforce. It's really a function of how do you think about technology in concert with your workforce. We at Deloitte talk about it as the age of with, the age of technology with your workforce, and really embracing this idea of the codependency of technology and workforce. We're also in an environment of a very tight workforce where there's a scarcity of top talent. That's going to be the challenge for organizations to demonstrate to top talent that they can grow and evolve the work that they do, working with leading technology in a very aligned way. Finally, it's what top talent really wants in an organization, is to learn and grow and to be part of an organization that's supportive of them actually embedding technology in their work.
Brian, thanks for joining us. And I have to say, being 15 years into this role, one of the questions that always comes to mind is, what advice would you give to yourself in year one that you think would be instructive?
Well, I think that's a little bit different because in year one, we were in the middle of coming out of the financial crisis. So the advice I give,
stay strong.
Stay strong, keep keep calm, carry on, all that stuff. But when you're now to a different place, the advice would be different. So if I'd have been in that place when I started, it'd be different advice. But I think as you look back, I think the advice is always just to remember that it's a team that's going to make you successful, and make sure you focus on them. I think we did. I think we could even focus even more on it, and make sure you put the right people, make the right people decisions quickly, so you get a team that is focused on what's to come next, what we went through. And I think I once asked Jack Welch, about replacing people, and he said, "You got to switch people out right away." And I said, "Did you do that?" He goes, "Of course not, but I tell everybody."
He didn't cut the bottom 10% either, did he?
No, he meant in terms of your management team. So I think we all look back and said, "Geez, some of the stuff I did a year or two in, if I'd done earlier, I'd have been in a different place." So the advice I give myself is to move faster, and we move pretty fast. But you always have to take it from, as a person who studied history, from where you were, not where you look back to, because it's easy to second guess or to say something better. But the team was the key.
Okay.
Was there ever a moment that you considered quitting, stopping, walking away from the job?
No, not at all.
Really?
I never did, because what was fascinating when he took over, and we went through a search that was, public, and who was going to get the job and all that stuff, just not what you should do and not what we'll do for my successor. Ultimately, we went through, we were being bandied about. I testified in Congress before I was CEO during the search, and was told by the head of the House Investigation Committee, "There's no way you should be CEO of this company." So
Why?
Because he didn't think our company was any good and I was any good. So, and that person a couple of years later became a good colleague in a way, in the work we did with him in the mortgage crisis. So
you're a forgiving man. That's something we discovered here.
Well, forgiving might be too strong, but I don't hold grudges, except as an Irish person for 100 years. So, but the reality is, I think if you think about how we came through it and how the search and then taking over, I think never would I quit, because when you looked and saw and could see the client base, the quality of the businesses we had, the opportunity we had to take inherently a company was put together by acquisitions and turn it into an organic growth engine. And then you looked out, and we had 300,000 people around that time, and their livelihoods depended on us getting this right. And there's 60 million clients and all that stuff too. But those people are near to you. You're looking at them every day, and you're saying, they're depending on you to make the right decisions. And I just never thought, I would have thought that quitting was giving up at a time when we had so much we could do.
You mentioned that you're Irish. I know you grew up in a big family. You're one of 8 siblings? Is that correct?
That's 8 total kids.
8 total kids. Siblings. What was it like to grow up in a family like that? And was there ever any expectation that you become CEO of Bank of America?
I mean, I think our family was, my dad, he was a scientist. My mother was very bright, but got married at 18, went back to work.
As one does.
55 years old, and started working again, and, rose in the insurance industry as a salesperson. And so, they were all different. There was much more at science, and much more computer scientists, biologists, some teachers. An architect was kind of the closest thing to a non-scientist we had. And then I came along, and I always wanted to be a lawyer because my grandfather was a lawyer. And so I went to law school, and I came up when F. Lee Bailey was the shows, and Perry Mason was on TV, and you wanted to be a criminal lawyer. You wanted to defend people. Then I got to law school and I ended up in corporate law, but that's a long story. But, you kind of grew up in that idea. So I never thought about business, honestly. And it was not my household. My dad worked for DuPont, which is a big company, but he was a research scientist. I mean, he spent his whole career researching plastics. And my mother went to work for an insurance company. But that was far after I was not CEO yet, but I was deep into my business career. So I didn't really have anybody pattern myself out after at home, not because they weren't great people. It's just they did different things.
Right. What made you want to take the switch into business from law?
Well, I was lucky. This is Jim Collins has a concept of return on luck. And everybody gets lots of chances to be lucky. The question is, do you have a return on? I got lucky. I had a fellow named Terry Murray, ran a company called Fleet. And I was working for a law firm and doing transactions for him when they were starting to roll up banking. And we did a very complex one called the Bank of New England, where Fleet bought the Bank of New England, and I helped work on that. And Terry, after that, said to the general counsel, bring him in. He said to the general counsel, who was one of the brightest people I know, frankly, he's too smart to be a lawyer. And I never sure if I was the general counsel
wait.
how I
That
would
sounds
take
like
that.
one of those phrases like first thing we do is kill all the lawyers. You don't want that.
So Terry was a great guy. He's still alive and does a great thing. I still talk to him once in a while. But he brought me in knowing I would never stay. I went in the legal department for like 90 days, and then I started on a
90
project.
days.
And I started on a project about re-engineering the company, and this was when Chandrika Tandon, if you know Tandon Associates, she started re-engineer companies in Champy, and the books were out and stuff. And so I started with that, and I got lucky. I just made the decision. I was married and had one kid and a second one on the way, and my wife supported me, and we just made the decision. I had never operated a business. I was a young partner law firm. I was making some money, and I said, "This looks like it's interesting." And then the inverse of that is I could look down the hallway in a law partnerships and see myself every 5 years till 80 years old at 30.
Which gets a bit depressing, doesn't it?
Well, depressing would be the right word, a bit constraining. Let's call it that.
Constraining.
Yeah.
Well, I mean, one of the things was there a moment where you realized that you're good at this, that you would be a good leader, having not started out or had role models where you thought, because there's many types of CEOs, and you're not like some of your peers. I don't turn around every 2 minutes and hear you commenting on random things in the environment. You lead very differently.
Yeah, I mean, I think so. If you participate in activities, sports or other things, leadership and captains of teams and stuff like that. So, leadership comes at you, and how you respond to it is inherent and sort of inherent in people. And you can't really teach people to lead, because what you do when you teach them to lead is you teach them away from the style that they are. And so our company, and how we run our company is just to go out there and execute and just do the work and get it done. And that reflects all of the management team, not just myself, and how we think about it. We put the company above all else. We put the teammates above all else. We put the customer above all else, the shareholders above all. We're second, and we go out there and drive it. That you learned, from being on, sports teams or being part of a law firm with the partners, had to make the decisions or being running part of the company. And I think that's one thing. And the second thing is the approach I've always taken to leading this company is from out in. And in all my business, I learned that from a teammate a long time ago who, we were in some intellectual discussion, and she finally looked at the person sort of laying out these grand ideas, how we're going to redo this business, and said, "What would it feel like if you actually had to do this?" And this woman had grown up as a teller all the way to run a private bank. Mm-hmm. So she knew what it felt like to start at the point of attack. And I listened to that, and it suddenly hit me that every decision we have to make as a leader, you have to think about who's going to do it, not what the decision is, because decisions are relatively easy. So if you put all that together, I think you form your leadership style over time, but inherently you have to have a nature that you're willing to step in and lead in a time of good times and bad times. And, you're willing to be take that responsibility, and some people wear that responsibility like a comfortable sweater, and some people can never get into it. And
is it a comfortable sweater for you?
I would never. That'd be your judgment or other people's judgments. But I think
for those who are just listening, Brian's here in a suit and tie, but that's not in any way
it's
an
a
analogy.
Comfortable sweater for
it's
me.
a comfortable sweater for you. It's one you wear a lot. But I do want to ask a bit, since we're in tough times now, and you mentioned, of course, the financial crisis where you're going to Washington. I was in Davos when I know you're on stage. You're very calm under pressure. Is that the right way to put it? What do you think about in those moments where all eyes are on you? The world is not as we would have predicted it to be. What goes through your mind?
One of the things that you look for in people and you try to be is an energy giver, not an energy taker. And so when you're in a situation of pressure, how do you give people energy? Well, being calm and showing them a way to do something as a team and as a group, that enables you to make progress. A lot of nervous energy about, oh, woe is me and the world's not perfect and somebody said something or this, that's in a second. So one part about leadership is the calmness. And it's been interesting as we went through ups and downs over the years, people would sort of equate you to people who were far more consequential, but in the calmness, you had to keep calm and carry on, all that stuff. And so they would, and by that it's done. The second is you have to stay informed, you have to learn, and you have to be mindful that all people aren't going to be as calm as you want to be. You're looking for people who can be calm at a point of attack, because at the end of the day, that's when you think about these broad organizations with 200,000, 300,000 teammates, 210,000 now, and they look to you, they don't want to see a person who's going to panic. Now, you may have every nervous energy behind it. You may wonder in the middle of the night, what the heck is going on? But if you show that and you let it eat at you, you can't give energy. And so when I look for leaders, and I hopefully live to this, when I look for leaders, I look for people who give energy. A woman named Ann Finucane worked for me for worked with me and for me for a number of years, and she always, would come up and say, that person's just taking the energy out of the room. We can't,
How do you give energy? Is it just, honestly, I mean, I know that we'll get to the business environment, and you can wax eloquent on so much that's happening there, but what are the is it just a native personality thing, or do you look for certain tactics people have in these situations?
That's problem solving. Let's focus forward. Let's keep figuring out what to do next. Let's not whine or be constrained or think about what went wrong or woe is me or it's not fair. It's not. Look, we had stuff happen to our company that over the years, litigation, this and that. You could always say it wasn't fair, it wasn't right, and it wasn't. But that didn't get any good. That wasn't going to get you out of it. That would maybe make you feel good. And so it's people who look at the situation, even in a calm situation, and the relative calm we're in now, saying, how do we grow the businesses? They're looking at saying, I've got to go out and do this and be calm about how they execute and process and discipline, as opposed to let's just go out and do a lot of activity and see if it sticks to the ribs. And so, that's the thing. And there are things you can tell that come out in times of change, stress, whatever the words are, that you can see pretty quickly in people. So during the pandemic, I learned about people. During the regional meltdown, you learn about people. You see how they behave when the blank hits the fan. And if they behave a way, they can keep going. If they behave a different way, you know that they're going to have a harder and harder time leading less and less people who directly know them or directly depend on them or directly influence. And that's what we do. And then the second is have perspective. So when people say, oh, this is tough times.
Worst ever? You're like, wait a second.
Wait a second. Hey, that election in 1800 was pretty tough, and our companies around then.
But
they wrote a great play about it called Hamilton. People shot each other. The people were brought up for treason. And I said, so the politics has been difficult. Our company's been there.
Yeah.
And so you have to have that perspective that the institution that we represent, and we're here a nanosecond in life cycle of this company or this world or this, our job's to improve it. But if you panic and say, oh, this is so different and whine, that's lack of leadership in my mind.
I very much appreciate the theater reference there, Brian, because I'm a big theater fan, big Hamilton fan. And so I'm going to throw another theater reference at you, which is even though you're such a calm person, I'm sure you're in such a high pressure job. You must get stage fright or nerves at some point. What do you do to calm those down? Is it meditation? Is it breath work? How do you fix that?
Well, the funny thing is, if you go back to your first year versus now, a lot of what I've done, you've done a lot. So I can remember there's like the first earnings call I had. You're up there, and all of a sudden you're going to describe it. It's complex in this, and you're now it's the 63rd, I think, this quarter.
Right.
So it's you kind of get used to it. You know what to say. You know what's going to happen and how it's going to play out. But there's always surprises, and you always have to think about it from the perspective of the people that moment, because it's not the same people, but you learn from your experience. So I think the antidote to anything is preparation, and the antidote. And so, leave aside, I'm not a professional athlete, but you watch the great professional athletes. When you watch them, what happens is when times get tough, they slow the world down. And some do it by techniques. You can see the breathing techniques, but others just do it by just how they mentally focus. And I think, so it's the same business. Believe me, behind the scenes, you can be worried about everything. You can think, we screwed this up. What are we going to do? But when you go to execute, you have to have the calmness and of thought, and you have to do it. And then when you're on the stage, experience helps. That's different. But it's just, honestly, if you believe in what you're saying, and you should only say what you believe in, honestly. And if you're confident in your message, you deliver. And but are you nervous every time? Yeah, because it's your chance to have impact on something that you got to think about.
Speaking of screw-ups, was there ever any time as a leader that you were totally wrong about something? And what happened or what changed your mind?
We made decisions that had implications that we didn't think. So a long time ago, we put a fee in on about that we're trying to raise revenue, and they'd done stuff to limit fees. So we put in this thing, the $5 debit card. You can go back and look at it. It's famous. The reality is the President of the United States, it was President Obama at the time, stood up in front of a line and said, one of the press lines and said, these banks don't have a right to make money, and it was all about us. I was going Larry Kudlow live like 10 minutes later. Oh. So, of course, Larry, boom, President Obama just said this. You're like, okay, what do I do when the President of the United States says we don't have a right to make money, and he's dead wrong? We have a right to make money. That's what capitalism is. And they just didn't like so it was this kind of odd thing. And so, but the decision didn't play well. We reversed it, taught us a lesson about really making decisions from the out in versus not. So, something like that. There's other cases like that. They would not be as momentous as, a lot of the rest of the world says, care say you made a business decision. But the reality is, when you got the President of the United States commenting on your consumer strategy.
or your partisanship, then you're like, oh, I've seen this before. Just stay calm and carry on.
But that's the thing. So there are a lot of decisions you wish you made differently, but you got to also be careful about, you got to learn from the decision you made didn't go the way you said. It's not necessarily it was a bad decision. That's people take risk and we make mistakes and we eat things. But what you don't want is an era of a lack of intensity, a customer focus, knowledge, stuff. If we make a bad business judgment, we get paid to make judgments. They're not all going to be perfect. So your goal is to get people to understand that difference. So when somebody makes a mistake, as long as it's an era of commission, in other words, they did the work and did it and made it as a pair of omission, they didn't do the work and just back of the envelope. That's what drives you crazy. If they did all the work and they said we're going to do this and they do it, it doesn't quite work. Well, that's what we get paid for.
One of the things that always strikes me about banking is, let's take it from the consumer perspective, is I think the average consumer holds their bank account for like 19 years. I mean, it's hard to dislodge us. Once you have us, inertia is a powerful force, right? So does that feel like sort of the calm part of the business? And I'm just curious about the mix, because then you mentioned the financial crisis. That was a time where all of a sudden we looked at banks and said, wait a second, I thought these were low risk institutions. How do you think about it now when we're talking about deregulation and obviously technology having an impact?
So if you think about the financial crisis, the piece that gets a little lost in the dialogue is that you had banks, regulated banks, ourselves, JP Morgan, Citibank, and then you had a bunch of institutions, which we are now banks, but weren't then, that caused some of the press, and we weren't perfect on our side either. But then you had non-banks.
Rhymes with Moldman Max? No, I'm just kidding.
Countrywide and things like that. And so, so the reality is what came out of the financial crisis, the one good idea is they pushed everybody under the tent and brought a set of capital rules. So the capital ratios, on Lehman weekend of those institutions were really under threat. Now, we did some interesting things and caused stress and that, but I think if you look at the thing, that's the biggest thing that came out of financial crisis. One is it took the arena of people who are core to the economy to help drive financial services, et cetera, put them under the tent. We have gotten away from that a little bit. We let more stuff drift out since then. And so the danger I have now is they regulate by charter again, which we admitted was a mistake in 2005, 6, and 7, leading up to the financial crisis. We regulated by a securities firm was regulated by the SEC. This, even if we did the same activity, and so that we've got to make sure we don't repeat the mistakes fast. If you take a deposit or make a loan, you're a bank, and so put you under the same
So
frame.
we hand you a wand. What would you change right now? Because certainly, again, when I talk to bankers, the level of regulation at one point, just like multiple layers, multiple jurisdictions.
Yeah, and that's so. What happens is, if you look back and say, all the rules, this one was developed because somebody didn't like that, and somebody didn't like that, and somebody didn't like that, and somebody didn't like that. If you add them all up, you say they don't make sense, and they're in conflict with each other. There's parts of Dodd-Frank that actually literally contradict other parts of it that have never been straightened out.
It's a telephone book of...
Yeah, and so the question is, 10, 15 years later, the best things that came out of it is the stress testing, because what that does is prove to society writ large that we, as institutions, don't have risk, that they can't be tested by a third party every year. So, and that happens here and around the world, that helps. The second thing that came out is, the base capital rules. And so requiring us to have that. Have they gone too far? Yeah, they need to swing back, but the base capital rules are fine. The third thing is sort of the liquidity regime and the idea the FDIC protection isn't there for the depositors. And frankly, it's get everybody in FDIC protected accounts for the transaction accounts, things like that. That's a good idea. And the fourth thing is that we pay for that. So there's a much better understanding that the industry actually is self-insured with the government wrap in front of us. That then allows them to actually have a real dialogue about what we see they should do, as opposed to we're from the government, you're betting our money. That dialogue has started to flush through because it was dead wrong before, but convenient,
Right.
but dead wrong. The reality is the FDIC is basically funded by the industry. Silicon Valley, First Republic, those $2.8 billion we paid into that failure set. $2.8 billion. It's so I'd like that we didn't pay it, but we paid $2.8 billion of our share of capital. So we have a high interest in getting this right. But those are the good things. What happened is the pendulum just kept swinging, and some of the stuff have adverse impacts or aren't consistent. We're saying just let us rationalize it. By the way, we have the risk. In other words, when those banks go down, it's us that has to pay for it. So let us listen to us. And that's where we hopefully can get a dialogue going with the current administration and get that back in the middle. It doesn't do us any good to have it swing back and forth. It's too hard to operate. You're trying to do tens of thousands of business customers and millions of consumer customers and 137 countries you do business, 60 places you have people, across the world. You don't want this to be, all the different
Politicized.
pieces. You want it to be as calm as it can be.
What is your interaction with the current administration like? I think I read an article recently that you and your peers are really struggling to chat with the current administration. Is that the case, or has it been?
We work with the administration, with the people that are relevant in our industry. So the people in the Treasury, Secretary of Treasury and treasurers, and the various economic things. Because when we talk to administration, some about policy, so the Fed and the OCC and the FDIC and the Consumer Bureau and the people and the colleagues in Congress that work on it, that we're all talking to. In the end of the day, the issues of the moment are a lot less about us, but they ask a lot of information about us. How do we think, our teammates, especially in Canada's Browning Platinum research team, will help provide advice on how a tariff regime might work or not work. And so there's a lot that goes on in our teammates in the Treasury borrowing area. They talk to them about how the markets are doing. So we have a lot of teammates talking to them, but a lot of our interface to administration for regulation really comes through the regulators, not necessarily the centralized administration.
When I talk to people about AI, it's often, of course, we're all in on AI, we're doing agents, et cetera. But I was talking to somebody yesterday where CEO, he has a safe word for his staff and a different one for his kids, because he wants to know that when they get a phone call from him, it's actually him. And I keep waiting for the fake earnings call where, some arbitrage person comes in. And how do you think about it from a security point of view? Because again, the banking industry usually is more conservative to take on social media and the like for many different reasons. How are you thinking about it?
So this is the time we tell them that we're all avatars, right?
We're all avatars.
We're all our digital selves, right, Diane?
I was just interviewing my digital self, and she had no sense of humor and seemed a bit superficial. But other than that,
so you're pointing out there are a lot of pieces involved.
A lot of pieces there, yes.
But I think so. If you go just to really cybersecurity, and our colleague Chris Fader and the team under Ditcha and Craig Frelick, who runs the infrastructure, and they work together. We spend a lot of money working the security, but it's also how you decide to interface to the thing. So when the new large language models came out and people said, well, just bring them in and operate them, the problem is they're curious people. So they're going to suck all the information out of your systems. Mm-hmm. And we could see right away that some of the stuff we saw in there, we guessed was not intended to be in there. In other words, it was being pulled out when people put it on their computer and pulled it out. So you had to, and so instantaneously, a lot of the big banks, including ourselves, said,
we
won't allow our teammates to load this down. And everybody thought we were Neanderthals. What we knew was that exfiltration risk was high. So there are examples where we are slower. Now, that didn't mean you couldn't go on your personal phone and do whatever you want, but if you're going to be on a company device where your company information was stored, including information about customers, you couldn't have the thing doing it until we could figure out. Now we figured out how to let these models be cordoned off and run and things like that. The flip side of that is AI is the next level extension of all the techniques we've been using for automation and digitization and assisted intelligence and augmented intelligence, now artificial intelligence. And we have this thing called Erica. So we put ourselves a decade ago, and I would talk to you about a model which was going to answer the questions for the customers, and you would look at me like you are the silliest person I've ever heard. And by the way,
you were ahead of the curve.
I was a little skeptical of it too. I have to say that's why I didn't make a decision. I didn't make a decision.
Right.
So they went to Stanford. They did the language. It was natural language for banking, because if you asked what my balance was, you might get a yoga class invitation. You might get a this. You might get a picture.
Don't
of
want to hallucinate about my bank account.
Exactly. So when somebody wants to know what my balance, they had ever particular thing in their mind. So we went and built a natural language, and we built the rules around it. Then we trained it, and then it operates. 20 million customers used it last quarter. So it's not a thought process; it actually operates. So we believe heavily this is very interesting, and because that 200 million interactions last quarter in Erica would have been a personal one-to-one activity. So what do? We took Erica, then we put it, if you go into our Flagscape, our intranet type of thing, and you want to have a break fix on your computer, you hit the little red dot button, it pops open, you say, I screwed up my password and I need to reset it. It does it all with you. And so you can see this application. So we have high hopes. You have to be conservative because you had to have your data right. Because if I make a decision, leave aside, if some kid writes a term paper and gets the facts wrong, the kid probably gets hit over the head. That's
Health
a term
and
paper.
Human Services report.
If I turn down your loan, that's a life-changing experience for you. So we had to make sure the decisions. And by the way, we don't need additional regulation about AI. We are liable for that decision, whether we made it by literally a person doing it, the current scoring methodology, AI. So we had to be careful that the data was perfect, the interface was good, and then the decision quality was high. And it's unbelievable where these things are going. And so now we use it in Erica. We use it in self-help and execution agents in the common parlance. We use it for coding. We use it in the legal department to help us decipher all these laws, rules, and regulations that we have to pull in as they get published and do it. So we use a lot of places, and we have high hopes where it's going. And we're in early stages of it in the world using this, but it's a powerful engine. And its reasoning ability is really kind of interesting. If you think of Einstein, as a third grader, the entire information cycle of the world coming at him and be able to process, to Einstein as Einstein at 50 years old with all that. I mean, that's the travel this thing's going on, is described to me. And it's getting closer to that 50-year-old, not the third grader or middle school person, and it keeps moving. It's unbelievable what it can do.
I was talking with your CTO about it last night because I was asking about Erica, and I was thinking, I pay so much money for this financial advisor, and I'm sorry to my financial advisor if you're listening to this, but I'm like, could Erica, as the next generation of Erica, to give me financial advice and be a advisor? Do I need a human advisor anymore? So the next stage of robo-advisor.
So that always goes. We have 7 million people did life plans. Yeah. They went on so far, and more do it. It grows 15-20% a year. And those are people went in and loaded their own information into a model. I mean, that says, what do you want to say for education, kids' education, second home, retirement. You pick your goals. That's the life goals part, and it spits out a financial plan. And then you can turn around and execute that in what we call MEGI, Merrill Edge Guided Investing, that will invest against that strategy based on your duration to those events, your risk tolerance, and report out, and it will automatically rebalance continuously for you. That product is $50 billion in assets under management and 7 million people using life plans. How that becomes more what's the right word? Facile for the person to use is the quality of the dialogue going up from when you first heard about ChatGPT 2 years ago and ran out and tried it.
We're all going to fall in love with our operating systems. Right?
Yeah.
They're so good. But
so that transformation of the interface and dialogue and the natural language ability process to keep up with the impromptu. Do you really want to? Yeah, you want to say for college. Okay, what do you really mean by that? And how do you mean?
This is a bad idea or a good idea.
Yeah. And so we do that. Now, the reality is that a human is also important because the emotion and understanding the nuance. And you said you wanted to do that, but did you really want to do that or this? Right. And that's why financial advisors are very important. But the bridge between us two is we can make that advisor more efficient because they have more time to have that dialogue with you as opposed to how do I resettle this portfolio.
That'll be the singularity. You mentioned education. I'd be remiss not to ask, you became Chancellor of Brown, already you knew that this college campuses were swirling. This is to me the least Ivy of the Ivies. What has that been like for you at this particular juncture? Like you needed more drama in your life?
Well, look, in the end of the day, I'm the chair of the board. I mean, Chancellor is a fancy name for the chair of the board. I've been on the board for 15 years.
You have.
And I was on the President's Council before that. So, I went there. My wife went there. 2 of my brothers went there. One of their wives went there. 2 of my kids went there. My nephew went there.
Wow.
2 of my kids' spouses went there. So I owe the place.
Talk about your big family.
I owe the place, and I always say it. So, I owe the place the fact I came from Ohio, got there, learned so much, learned from the people at the school itself. So it's funny. But the key is we have a great management Chris Paxson's a great president. She understands this. She's been at it 13 years. She just extended for 2 more years, so 3 more years in total. Hopefully we'll extend beyond that, but that's a separate discussion for her to think about. But she's done a great job and runs a good place along with the provost and the deans and stuff. And so it's been an interesting time, and they've done a great job, and yet they're subject to all the discussion that goes on out there. And I think we as a board have to govern and not do, and so we have to help bring our experience and wisdom. And I think they asked me to do it, and like anything else, when somebody asks you to take on a role, and if it's stuff I know about governance and how to run. I was happy to do it because I owed the place.
Well, I always like what about Brown is the pass-fail system. Like, it seems to encourage a love of learning as opposed to a love of getting a particular grade.
The elements it was the open curriculum, so you could take anything you wanted, and you could have lots of crazy interfaces of the kid that was music and
Did you take any
computer
crazy
science
courses?
I took a wide range. I was a history major, but I was also what they call organizational behavior management, close to what you could have as a business major. At Brown, they don't. At that time, they didn't have it. But I think it was the open curriculum. The pass-fail is interesting because at the few courses I took pass-fail, I felt I had to study harder because you didn't know where the break point was.
Yeah.
So you're always nervous. If you got the no cookies, as we call it, no credit, that was like damaging. So
my brother has made that mistake many a time on a pass-fail.
So it wasn't like everybody said, well, you can coast and just get by. You don't know where that get by is, but the professors there challenged you and taught you a lot, and the colleagues I met challenged you and taught you a lot. And and it was an undergraduate place, so it was, the curriculum things, it's still dominated by the undergraduate population, which makes it a little unique. A lot of these colleges that there's 7,000 undergraduates round number and 3,000 graduate school. It's very different. A lot of them are 2 or 3 times the graduate school size, and so it's really dedicated. It has a great research plan, a great other stuff. It's also dedicated to the undergraduate experience, which makes it kind of fun to be around.
With this funding freeze and all that's been going on with the current administration, with Ivy Leagues, what would be your message to students on campus who may be really worried about this becoming a reality?
Let Chris and the team do the work to figure out where this all ends up. Look, let me back up on the research side because I've talked about it. Over the last decade, one of the other things I got involved with at the request of our former chair, a guy named Chad Holliday, was this thing called the Council on Competitiveness. And what that consists of is the big research universities, the national labs, labor and business. And it came up after Japan Inc. was going to take over the world and all this stuff, really just post-Reagan. And how do we get America competitive? And I learned from them, I always had it in my mind, but I learned from them a lot about how critical the research to commercialization of research was to the American pathway. That is what we got to remember in here, is that we have radar because that was MIT. The people at MIT discovered this, and then the Second World War was able to be won. We have a nuclear bomb because we brought scientists into our universities and then brought them into the Manhattan Project. We had the computer because of the skill sets. We had word processing because we had Polaroid because the people, so all these, and we had the mRNA, and we have, so this idea of investing in research is a real investment in the future. That's what you have to figure out. All the other stuff we have to figure out, the ebb and flow of education process and how people think about different people points of view. But we can't forget that one of the competitive advantages we have in this country, it's the only place where pure science can be commercialized at a rate that it just exceeds everybody. That's why every brain in the world wanted to come here.
And a magnet. Yeah. It's you think a lot about leadership. You strike me as a student of leadership. You mentioned Jim Collins earlier, and so before I want to explore that a little bit in the Bank of America context. I think you've actually done some incredible leadership for that on-ramp for the next generation. But who else do you look at? I mean, you mentioned Jack Welch. Are there other people you've looked at as great leaders who inspire you, or even?
Well, I think I think you have to think of the context. But if you think about in business, I look at all the CEOs out there that I see, whether it's the BRT or the Business Council or whatever, American Heart Association CEO group, all these, you look at those and you're always watching them and learning from them. And you can never forget that they're one of the few people that go through what you go through and the trade-offs, because a CEO has this unique thing that they make the trade-offs. Everybody else runs a business, et cetera, but the team at the top has to have the trade-offs, and they have to have all the constituencies in mind and how you trade off between the customer, the shareholder, the teammate, the communities you serve, and things like that. So I learned from them all. And so everybody says there's a one or this one or that one. The answer is it's composites. And so I've been lucky that I've had great mentors as bosses over the years as the CEO boss. So Terry could execute like nobody else. Chad Gifford taught me more about the customer side of the business, and Ken Lewis taught me about scale. And so you learn from that. Even Hugh McCall, I've gotten to know. I've learned a lot from him. And I face a different world. They all admit, look, what you face is wholly different than what we face, but the seeds are there. And so you just have to take it. And even Jim, who we done work with over the years and had him, one of the lessons I had with Jim early on was I'm CEO for not very long.
This is Mr. Good to Great.
It's good to
how
great.
The Mighty
but then how the mighty fail or whatever it was. That book got published in just when I became CEO. And you open up in chapter 1, you know what it says? Number 1, Bank of America. And I said, I've already failed. I haven't even gotten started. And it was about the decades ago Bank of America that had this technology competency that was not materialized on, and then ended up merging with Nations Bank, which became Bank of America by name. And so it was kind of a funny moment. I literally cracked the book. I said, I failed. I haven't gotten it through the first year. But what he talks about is, how do you sustain advantage? How do you sustain that? How leaders have to get the right people on the bus? All these sort of straightforward questions. I'd never simple 12 questions for manager. They're just good reminders. But he cites other people who've done it.
Well,
not that he has some brain that.
And that failure being doing the right thing for too long is as much a risk as.
It's when does something become stale, and how do you revitalize? So consumer banking, from 2005 to 2015 to 2025, completely different strategies. Even though it sounds like I go to that bank branch, it looks, it's a bank, maybe more modern than it was in 2005. Completely different strategies. 2005, barely had mobile. 2025, a lion's share of the activity goes through mobile. And think about that. So you always have to be fresh, and that's what we try to do as a team is always bring outsiders into challenges. So on AI, we've had lots of outside people come in, and everybody from professors to practitioners to vendors who want to sell us the product. So that's the way you learn too. And so you got to be curious to keep curious and keep, and there, you can't be sanguine, because if you are, somebody will run you over. And that's one of Jim's lessons, basically.
Well, in your own life, 15 years, that's a long time. How do you keep yourself from the job from getting stale and keep it exciting and make you want to go to work every day?
Look, you always focus on what these teammates can do for their clients and customers. So anytime you want to get re-energized about what we do, you go, I was in Nashville last week, and you hear those customers talk about the difference they made to them at times when they needed the teammate to do something, and what they did. That's what keeps you going. If you go out and see the teammates in a financial service center, and how excited they are to do the best thing for those customers, you have to remember why you're here. And even in the depths of crisis, when people talk about purpose and leading by purpose, you have to make a lot of money, and you have to make good returns. And you have to have the right and you have to do it with purpose, because in the end of the day, there are times when this can bounce around with the environment around you, and you got to put it back on course. But if you lose the purpose, you lose the joke. The purpose also keeps you fresh, because if we're going to really serve a consumer, imagine yourself 20 years ago, what we did for you now, 20 years later, you have to have that constant curiosity to push yourself ahead. The minute you lose that, you got to get out. And and I'm lucky to be with people around me challenge me all the time about that, in terms of what we should be doing, thinking about, and you keep blending people together. And so, my hair may be getting grayer. I feel that I'm getting more curious as I get older, because, it's a broad world out there. You got to understand.
I want to ask about the moral responsibility of leaders. I'm looking at the pin on your jacket over there. First of all, what is that pin?
This is the Foundation to Combat Anti-Semitism, which is about anti-hate that Robert Kraft started. We had them started on October 7th. It took on a different meeting, but basically Robert's put a lot of his time and effort, and he's been a great client for years and a friend for years. But we as a company wanted to support him, because we believe this message of we have to combat hate. You have to induce dignity. So Tim Shriver worked a special
Yeah,
on
yeah.
this on some of his dignity work. Our teammates, summer teammates are going through that training right now. We trained all our senior managers on it. And all this is just to have people realize that you can disagree, but you can't hate each other. You can disagree, but you got to treat people with dignity you disagree with. And Robert, the real narrow purpose was to raise awareness of the amount of 2% of the population was getting 50% of religious hate crimes or more. And it's accelerated since then. That just is because of who they are. That is just so bad. Now, the reality is Robert always knew it would broaden out into Black hate, Hispanic hate, Asian hate after the pandemic. I mean, we had Asian teammates that were attacked on the streets and stuff. And so, he knew it would go. It just went there faster because of all their relationships and stuff. And so we've been proud to support it. But that's because that comes from our teammates saying we got to help a situation with each other, and that's why we have 180,000 our teammates in our resource groups. That's why we have, and they work with each other.
One of the challenges right now is seemingly innocuous statements can sometimes feel like brave acts, and I'm thinking of DEI, financial inclusion, which I know has been one of the big focuses for Bank of America. I mean, how do you talk about the climate right now and what you're seeing, especially because you have such a broad swath of the population that you get to see as well?
It's about opportunity. And so how do you create opportunity? Opportunity for people who wouldn't get access to that opportunity. That's about getting people in our company or helping people outside our company, and then helping them recognize opportunity, but make sure the obstacles don't sit in front of them. And so you're not guaranteeing anybody an outcome. What you're guaranteeing is access to the opportunity and an ability for them to recognize that opportunity without changing themselves. That's what we define inclusion as. I can be everything I want to be at Bank of America and be myself. That's important. And how do we define that? We asked our teammates, how do you want to define this? And an assistant stood up and said, I think this is definitive. I said, fine. They went to hire consultants. I said, that's a great definition. Let's go with it. The opportunity is, are we open up the aperture and we're getting people? So as we think about employment, a very specific program we have is to help colleagues, kids in Title I high schools learn to code. Sophomore year, they learn to code, they come and work for summer. Junior year, come and work for senior year, they come to workforce or they go to college. But by going to those Title I high schools, you're creating economic opportunity. Mm-hmm. And so that's what people have to remember. A lot of this was geared to bring groups of people who weren't given that opportunity. From 1969 to now, we've gone from 80 million people working in America to 160 million people working. Population's only gone up 100 million people. Guess what happened? Women came in the workforce. An opportunity was presented. It went from 25% participation to where it is today. Those opportunity creation moments are what we're after. And I think if you think about that inside the company, it's about how we hire a colleague, a teammate at 18, out of high school. They start at $50,000 a year, $7,500 in tuition reimbursement, individual health care for $100 a month, family health care for $250 a month, a complete 401k match up to 6% or whatever it is today, 2% mandatory contribution on top of that, an internal education system. That's a heck of an opportunity. And how do you know it works? Every year I bring the teammates who celebrate 50, 55, 60, 65, and we've had 70-year teammates.
70 years.
Working for our company.
Wow.
So you can work to 88 then.
That person.
I hope I'm not working for 70 years.
That woman has finally retired, but she was an interesting story because she quit. She had a break in service. They had a break in service. She said, well, I got married. I said, oh, you got married, decided to come back to work. She said, no, the rules of the company were at that point. If you got married, you had to leave the company because they had to make room for World War II veterans coming back.
Oh my God.
They talk about a different
Riveter time.
Wow.
So 70. Yeah. So anyway, but when you see those teammates, they tell their stories. We have 15, 20 that will come into Charlotte, and there's more, but the ones that come in, and they'll tell their stories. And it's to your point. They couldn't have started at 45 and had been here for 50 years. So they started at 18, and they might have worked part-time, and then they might have come full-time, and then they might have started off in the financial center, and then they might be a financial advisor now. They may have started off in the processing area, and now they're running a group force. Or they may have stayed in the same job, but it's unbelievable. So you create it. And by the way, when you listen to them, I was a first-generation person that came into the company, or my parents did, and I got a job here. And I did it. So that opportunity, that's how we define it, is how do we create opportunity. And then we look outside our company, the programs we work with to provide the opportunity. So we work with groups of CEOs in Charlotte and Boston and Providence. How do we how do we take the techniques that we think we've learned, and here in New York too, and have more companies take advantage of the knowledge we have, because we don't have the capacity to hire everybody. So if we can get other companies to hire those same coding kids from Title I high schools, and Charlotte, Rick Elias has a great program, Road to Hire. And if we get 15 employers doing it, suddenly you got an interesting amount of kids coming out that get this opportunity. And we built a curriculum to teach high school kids how to work in a call center, because in Charlotte we had all these people who had call center operation needs, and then we did it with a high school and a community college creating a curriculum. Every one of them got a job. And so, so how do you create that opportunity? That's what it's all about. So leave aside how the words that move in and out, the court rulings and everything. If we create opportunity for people who'd otherwise not get it, that's a very good thing. And then we have to make sure once they are in our company, for sure, they have to be able to recognize that opportunity.
Yeah.
And what they can't do is say, I can't progress because I'm something.
Yeah. Now, you're talking to two New Yorkers. I'm also a New Englander, so I do have to ask, why did you decide to stay in Boston? Why not come here? Why?
Well, the headquarters is in Charlotte, so that's where my office is. And it was really, at the time, it's a pretty simple equation. I had a senior in high school and a sophomore in high school. You weren't going to move them and do what we had to do. And so I just, that was it. And then once you got past a certain point, it's life's changed. I got two kids in New York now, so it's a little different. But
you can move your
Good
headquarters
move.
here.
Yeah.
I want to, and as a student of history, and certainly somebody who knows banking history pretty intimately, where are we at this stage in history? When you think about there's so much discussion about what's changing, all these different cycles that are coming together. Of course, discussion about the debt, the dollar, AI, this confluence of things coming together. I'd love to just get your perspective in terms of what's on your radar right now you'd put on ours, because there's so much.
So I think the issue that we've got to deal with that we haven't dealt with over the last 2 decades probably is the idea of getting our eyes and stomach aligned, which is literally, we're a household, the United States. We have to spend more in line with our earnings power. So we either got to increase our earnings power or we got to spend less, and we got to make that set of decisions. And there are lots of ways to do that. So in 2012, 13, somewhere around there, there was a commission that was formed out of Congress and the president, Simpson Bowles, and they came up with a series of recommendations. The theory was, we're going to take those recommendations, we'll put them through as a package, and those recommendations needs tested, Social Security, did a bunch of stuff over long periods of times that would change Yorks. Never got done. So the outlines of what you need to do are there, but we got to figure out how to slow the rate of growth of debt to the size of the economy to make sure we don't go across certain thresholds. The way to do that is your operating budget, which is running a 25 or 30% operating deficit. So we spend $1 and we only have 70 cents to pay for it. That's the kind of numbers we're talking about. And someday that will be a real problem. Right now it's okay, and the operative word's okay. But the United States has been downgraded by all 3 major rating agencies, et cetera, et cetera, et cetera. So we got to get that. That is the number one long-term issue. That's going to take you have a little bit of revenue here, a little bit of expense savings here, a fine-tuning here, a efficiency drive among how money is spent. In the military, you have people far more adept at this and understand it about what we should build and what we shouldn't build, and we have to be able to suffer the ramifications of that. It may mean less jobs in this area and that area, and I think that's the number one issue, because the other day we have the biggest economy. It actually grows. We have a population that actually grows. We have the ability to get capital and form and get your return on your idea, your investment. We have the ability to have winners and losers that most countries won't tolerate, to have industries, get downtrodden and
Chapter
acquisitions
11's a good thing.
and all those things. And so all that's great, the rule of law and all that stuff. The reality, though, is what we got to make sure is that we don't squeeze out the ability to do all that because of federal and state debt. But the citizens have to realize that it's our money. It's just, do we want to pay it now, or do we want our kids to pay it? And how do we start to help pay that down? And that could be 2 choices: less spending or more revenue. And look, that commission had a series of changes, and many people have had it. But the governors on that outcome are things like, you have to make sure that we take care of the people who fall out from our capital. Our capitalistic system is the best in the world by a lot. Nobody's close. And But you have to take, some people fall out. We have to be careful what happens if a person can't participate in that system at the level. That's a given. The second given is we have to take care of the people who've gone through the system, come outside and retired. We got to take care of that. We have a safety net. That's a good thing. But absent those types of things, and we have to be competitive on tax rates and things. We can't just tax our way to it, or else you create really strange behavior. You remember back in the time in the Corporate Tax Act changes in the 17 was after a period of people moving stuff outside the country because the tax rate differential had gotten 15, 20 points. At some point, you have to say to your shareholders, why am I doing this in the U.S. to send elsewhere?
Why is everybody sitting in Luxembourg?
And those things, I think, that's the number one issue. Everything else can fall away to that because you have ebbs and flows in markets, ebbs and flows and excesses. But we got to figure that out because right now we as a society, and this is not blaming on any administration, any set of government, anybody, none of us have been willing to say we need to get this turned. And it's not, this isn't because I think people better understand that this is a matter of all things in moderation, not we got to go off a cliff. And a lot of this was always expressed binary. You got to stop all this. You got to balance the budget tomorrow. None of that you just have to work at it every day.
So looking forward, what do you want your legacy to be, and how are you preparing for, and I will say, eventual succession?
Well, usually people ask me that question to try to throw me out. So look, at the end of the day, the transformation of the management team, it's not me, it's the whole team and the whole 200,000 plus people, will be to take a company that was built on acquisitions, built on sort of consolidation, built on those principles, and turn it into an organic growth engine. And a customer-focused organic growth engine produces great returns and great share of value and does it the right way. And because it does it the right way, it has a perpetual motion machine behind it. And we've demonstrated that. We've made more money than all but 4 companies over the last 10, 15 years. One of the few companies that have made that much money every year. And so we got to be profits and purpose. And the legacy is that it works at scale. And that then says American capitalism works. Bank of America helps people recognize the benefits of that. And we can do it at a scale and a capability that then shows you can do this. You can actually make great returns for shareholders and do well for your teammates. You can have great returns for shareholders and do well for your customers. You have great returns for your shareholders and do well for the communities you serve. It's not a legacy for me. It's a legacy of how our company operates. What we had to do is make this huge transition from doing it by acquisition to doing it by organic growth. That's what we do. But remember, this company is really old. And
have you seen Hamilton?
Many times.
Many times. Did you see the original with Lynn? Oh,
of course he did.
We took out the theater a few times. Just for
I'm
our
sure
clients.
you did.
Wow,
right?
That's incredible.
If you need a brand build, that's it. Anything we haven't asked that we should have?
That's a dangerous question. So
Oh,
you guys are the professionals. I only have to
No,
answer
that's not true. You know better than us
thank
some
you.
of the nuggets to share. Thanks for joining us.
Thanks for having me.
Thank you so much, Brian.